Investing 1K into 10 different dividend stocks. Welcome back, guys, to the 1K Dividend Account Challenge that's taking place right now in 2023. For those that are new to my page and haven't heard what I'm doing with this challenge, I put $100 into 10 different popular dividend-paying stocks and ETFs and ETNs. We'll cover all the bases there. I picked stocks from TikTok, some that have insanely high yields, some that are extremely popular, and some that are just in almost everybody's portfolio. We have a mix of everything. We're going to compare how they do over the next couple months to couple years. So I have this account separate from my main trading account just for this challenge. You can see we're already down almost $10, but who knows what's going to happen. Still not a terrible day. The past couple days in the market have been really rough, so I'm already excited that we haven't lost more money in this challenge. So let's jump into it and talk about what stocks are in here. And the one negative with Charles Schwab is that they don't have fractional shares. So I tried to get it as close to $100 per stock as I could. So I have some cash left over, and what I'm planning on doing is reinvesting money into each one, and say Zim pays out enough dividends to where I could buy another full share. I will be doing that with the leftover money from Zim. So that's kind of how I'm doing it, as well as the dividends. I'm going to turn on reinvesting, and we'll see how I put on a buy order for reinvesting, so I believe that as soon as they have enough capital, it'll auto reinvest. I don't know. I haven't used Schwab before. This is, of course, a different account. So I'm still learning a lot, but I think this is going to be a really fun challenge, and I'm excited to see what stocks perform the best compared to what everyone says is going to perform the best. So I am super sick. Sorry for my voice. Sorry for my room. Redoing the floors. So it's been quite a week. But let's jump into this and talk about the individual holdings. So we're starting with ticker ABR. This is a excellent stock in my opinion. I own this in my other brokerage account. We have about $97 here, about $95 now after the past couple of days, and it pays about a 12% dividend yield, I believe. And then we have ARCC. This one is on a tear lately. The prices have been kind of stagnant, but the dividend is up to almost 14%, which is remarkable. For that, we have almost $94, another 9% of the portfolio, which is, we're aiming for 10, so high nines is okay. Next, we have ticker HRZN. This is an interesting one. HRZN is a BDC. ABR and ARCC are both REITs. ABR pays quarterly, ARCC pays monthly, and HRZN, I believe, pays monthly as well. So I'll be doing update videos on YouTube once a month, talking about all of the dividends that were paid out that month. I may even do it by week if we get enough stocks in here that are paying. So stay tuned for those. If you're interested in subscribing for that content, please do it. I am super appreciative to all my subs so far. You guys have been killing it. Next is PFLT, Pennant Park Floating Rate Capital. I'm really interested to see how this one does, because floating rate means that the interest rates on the money that they have loaned out is floating. So as interest rates increase, they are actually making more money on the capital they have loaned out. With that comes a couple of default risks, of course, but still, they typically do better with higher interest rates, and so I'm curious to see how the stock does. Performance-wise, it's been beaten down like crazy, and I don't think the market has fully factored into the floating rate portion of that stock. Lastly, we have Zim. This is the only one that I did not want to buy. It won the TikTok voting contest or on all my social medias. So we have Zim in here, and now at this time, it's recording a 170% dividend yield. It's not sustainable, but I did put this one in here to show how these yield traps will play out. And in the end, if it ends up making money, I'm going to be shocked. It's only 8%, 8.5% of the portfolio because the share price is about $17. So I only scooped up 5 shares of that. So we'll see how it goes. And now that is a total of almost 56% in equities. Now we're going to go to ETFs and closed-end funds. They also warn you on Charles Schwab about closed-end funds, just so you guys know. I bought them anyway because, of course, it's only $100. But we have our first ETN, which is our first and only ETN, which is ticker USOI. Priced in, this was an $80 buy. I couldn't buy more because the price is $80 a share. So once I save up enough to get another share via the dividend payouts, which could be quite a while, this one does boast a 40% dividend yield, and it actually paid a 40% dividend yield annually last year in 2022. So it did pay that out, which is impressive. Next, we have XYLD, a very popular covered call dating back to, I think, 1993. It is a monthly payer. It is a very popular one. It's not my favorite, but it's one that a lot of people hold, especially some of the older people that watch these videos hold this one, and it's relatively popular. Not as popular as some of the newer ones, like the one right below it, but we do have $80 in that one as well because the price is about $40 a share. So I'm interested in seeing how these ETNs and ETFs play out versus just the typical stocks. Second to last, we have ticker JEPI, the JP Morgan Equity Premium Income Fund, which is another covered call writing fund. I did buy 2 shares of this one. This is the largest position in the portfolio at $108. It's the only one that I went over 100 on because one would only cost me $54, and I didn't think it was worth only buying one, especially since I have so much leftover cash from all these ones that are $80, $70. So I'm trying to keep it as fair as possible. I have noted which ones cost what when I bought them, and Schwab will save that for me as well, that information, so we can see exactly how much percentage they've returned and then how much overall money it's made. Last but not least is SCHD. This is a very popular ETF, only pays about a 3.5% yield last I checked, which is definitely low compared to the rest. I think the only other one pays like a 9%. That's our lowest. So SCHD is kind of the test subject to see how just a typical stock performs against all of these other ones that are boasting higher dividends and that are higher risk. So I do like having that in here to show what, it's not like SPY, so it's not going to be the full market, but just showing how a safer, lower yielding dividend stock compares. Maybe it'll be better in price appreciation, but much less on the dividend, of course. Maybe we'll get some dividend cuts on the other stocks or ETFs, which I will note. I'm going to talk about all of that on my other social media, so if you're interested, if you guys want to go check those out and follow those. So here it is. We have about $350 in ETFs and closed-end funds. I will be averaging out to try and make each one $100 exactly if I can work a way to do that. It depends on how the price and the dividend payouts go for this. So I appreciate you guys watching the video to the end. I'm super pumped for this challenge. I hope you guys enjoy it. Let me know in the comments if you want me to do more challenges like this. I've thought about doing penny stocks challenge. I'm just not a huge fan of penny stocks. OTC stocks, over-the-counter stocks. There's a lot that goes into these challenges, and it does take me, I mean, $1,000 is a lot of money. I'm not extremely wealthy, so it does take me a bit of time to get these all set up, and it is a relatively large risk. I mean, I'm only risking really Zim, I think is the only one that I don't own. There's a couple I own in my other account that I do like. So if you guys enjoyed the video, please follow. If you want to, tag along with me on this journey and see how these stocks perform in 2023 and maybe even beyond that, hit the subscribe button. I really appreciate you guys. Thank you for liking the video if you found it useful. If you didn't find the content useful, you can leave a dislike. That won't hurt my feelings. It lets me know what people want to see. So as always, I hope you guys had a good day trading in the market, and thanks for watching.